So in this metaverse, you're going to be able to do experiences and things from the comfort of your home.
Imagine your best friend is at a concert somewhere across the world. What if you could be there with her?
My sneakers, I never had a clue.
Yo.
You're here.
Number one is based on facts. If any company wants to be relevant in any way possible right now, they're using one of those three apps, if not all of them. Hey everyone, my name's Nolan. My students call me Professor G, and it is my passion helping young people understand personal finance and the ins and outs of starting a business. Let's do this. 2021 is quickly coming to an end, and so these are three stocks that I think are totally undervalued and I think are going to be in for a huge awakening in 2022. Now, most of you guys know that my big strategy all centers around index investing because I think long-term and for 99% of investors out there, that's the smart play. And I do on occasion tend to buy up stock on companies that I know 100%. So when I see that their stock price is low and maybe too low, for me, that's a good deal. I don't get scared of something like that. It makes me think that this is just on sale, and so I need to buy it up right now. And that's what I'm seeing for these three companies. Before we get started, let me hit you with a disclaimer that I am not a financial advisor, and I'm just going to tell you guys what I personally am doing. But if you do like passive income and you do like learning about investments, please give this video a like so that it lets me know that you actually like this content and I'll continue making it. And then it'll also push it out for other people because the YouTube algorithm is kind of tough sometimes, but other people definitely need this information because some of the advice that I've seen give out here on YouTube is just... When a company has such a big competitive advantage over other companies in its area, it's said to have a moat. The exact same way that like a castle has a huge moat around it and it's super hard for any of the enemies to attack this castle. That's the idea here. So the bigger the moat or the bigger the competitive advantage, the harder it is to attack the castle. And when you're investing in that castle, you definitely want it to be standing for multiple years. So you want it to be well protected. So the first company on this list is Disney. Disney has an incredible moat competitive advantage when you think about their parks. The Disneyland parks are so well run, so kept up, and produce so much pure happiness that that will just be a competitive advantage that this company has for the foreseeable future. The next thing they have is Disney Plus. And Disney Plus has been a massive upgrade for the company. Nowadays, if a company doesn't have a streaming service, they're just left behind. And now while I like going to the movie theater, it's very convenient to be able to just turn on my TV and watch the newest movie that came out last night. Disney also owns a whole bunch of companies such as ESPN, ABC, Marvel, Lucasfilm, Pixar, and many, many more. Now, looking at the Disney stock for today, we're right under $155, which for the day seems about even. But if we look at the year to date, we're super down. We're down almost 13%. We're looking at a pretty high PE ratio of 139. Disney stock right now is down because they didn't hit their earning goal over the last quarter or even 2 quarters. And also their streaming growth has died down just a bit. Now we have to remember that when it started, it was one of the fastest growing streaming companies ever. And so of course there's going to be some pullback. One of the things that excites me most about this stock, though, is that Bob Chapek, their CEO, just said that they're probably going to get into sports betting. And sports betting is just going higher and higher and higher, especially as it gets more and more legal through all of the states in the United States. With Disney owning ESPN, they have one of the biggest platforms to be able to really push this. And as we see with most companies, if you have a solid platform, then it makes everything else much easier. Disney stock is down a bunch going into the end of the year, and I think it's only going to rise from here. So for me, the end of 2021, Disney is a stock that I'm definitely buying. The number 2 stock that I'm adding to my portfolio right now is Meta Platform Incorporated, or known as Facebook. Now they're going to be changing their ticker symbol from FB for Facebook to MVRS, the Metaverse. My reasoning for buying up a little bit more of this stock right now, number one, is based on facts. The fact is that they have over 2 billion active users and they own Facebook, Instagram, WhatsApp. If any company wants to be relevant in any way possible right now, they're using one of those 3 apps, if not all of them. Now, we already knew that, and so the other part of my bet on this is the speculative nature of what the metaverse will be. So if you think Facebook and Instagram has a bunch of data and it's really easy to market there, being words and scrolling through, how much easier will it be if someone were to create a whole world that when you walk in through this world and you're doing things in the world that you would like to do, you also see a billboard or you use something in this world that is branded by a certain brand.
It's a product in the metaverse where only available to your most ardent fans who paid special access to get to that product.
That's dope.
Commerce is going to be a big part of the metaverse. You'll be able to sell both digital and physical products.
So in this metaverse, you're going to be able to do experiences and things from the comfort of your home.
Imagine your best friend is at a concert somewhere across the world. What if you could be there with her?
You're here!
And so just like in the real world, when you go and do certain activities, you see billboards or you see businesses off to the side and they are marketing themselves to you. Same thing's going to happen in the metaverse, but it's going to be even more targeted to you since there'll be that digital aspect. So right now, when you're on Instagram or you're on Facebook and you're scrolling through and you see an ad that comes directly to you personally, it's going to be the exact same thing in the metaverse, except for it might be something that literally physically comes to you. That's why companies like Nike have already started to make their own little park, and it's going to be like the Nike park. And so just like how there's Disneyland and Six Flags and different places for you to go, in the metaverse you can go to this Nike land and you're going to be able to do different types of athletic things and everything will be branded Nike. So I think the possibilities are endless with this metaverse thing. So now Meta Platforms is selling at about $346 or so today. Now year to date they have gone up almost 30%. Their PE ratio is actually pretty low, 24. For a growth type company, an internet company like this, that's actually very low, which is a good thing. As you can see, solid growth in revenue, good solid net income. So Meta Platforms has solid cash, it has money to be able to do what it needs to do, and then also with the growth potential and the fact that they are going to be biggest in this space, I think that the metaverse is something that could be something very exciting, and I want to be a part of it by investing in this company. And now the third company that I'm buying up is one that I've been buying for a very long time and very much believe in, and that is Alibaba, which is a Chinese conglomerate. It's one of the biggest companies in the world, and it's something that you should be paying attention to. So how big is Alibaba? In the United States, we would say Amazon is just the king. It's just a crazy company. They have so many customers. They just do so many things. Well, let's compare it to Amazon then. Amazon has 310 million consumers. Alibaba has 912 million. That's 3 times the size of Amazon. The cash on hand that Amazon has is about 29 billion. The cash on hand that Alibaba has is $272 billion. Over the last year, Amazon went up 12.8% and Alibaba went down about 40%. So knowing that all of these numbers are showing that Alibaba is bigger than Amazon, has more money than Amazon, and just has an overall bigger platform being in China and that part of the world than Amazon, it's just interesting to see the price difference. One is at the top of where it's ever been as far as price, and Alibaba, the other one, is down almost half, so almost on sale for half what it was before The government in China has a massive amount of control, and basically if they don't like something, if they don't want something, they can just shut it down or they can just cut it as much as possible. And that's kind of what they did with Alibaba. It was becoming so huge so quickly. They cut some things, imposed a bunch of taxes and different fines on them, and even made it so that their CEO, Jack Ma, had to take a leave of absence for a little while. The problem is, though, that when investors start to see that there's that much power in China and that this company can be affected in that way, it does start to draw people away from the company, and that's what happened. A lot of people sold stock, a lot of people exited that company, so the stock price went down. Now, this is totally a risky type of investment, and so for those of you that are not as risk tolerant, this one may not be for you, because there is a possible way that China could just totally pull the plug and say, you're not a company anymore, and that's it. They don't want to do that, though, because Alibaba is one of the biggest companies, if not the biggest company in China, and the amount of taxes and money that they bring to China is worth it for the government to keep them around. All in all, I think Alibaba is just at a super discount, and while it is very risky, it's a risk that I'm willing to take, and so I think you guys should do your research and see if it's something that you might want to look into. So now I hope this video has been helpful and gives you a little bit of an insight of what it is that I do when I'm looking at buying a new stock. I definitely think that 2022 is going to be a big year for certain companies, and especially those that are getting hammered a little bit harder right here at the end of the year. So I'm going to take the advantage right now, buy into some of these companies, and hold on long term. If you guys would like to hear an analysis on some other type of stock or some other company that you guys are excited about, please put that down in the comment section below, and I would love to do it for you. I'd actually really be interested in what other companies you guys are buying and what your thoughts are on the 3 that I'm buying up. Thanks, you guys. I'll see you on the next one.